All right, everyone. I'm assuming that it's okay to start, Adinda. Okay. So, guys, good morning, good afternoon, good evening, whatever is more appropriate for me to say. Welcome to this class. We're going to be discussing about the ECB rate announcement. Now, this ECB rate announcement is as important as the last time around. Why do I say that? Let's put it this way, folks. Hello, Linda. Good morning. If you look at the commentaries, a lot of people are saying that the Eurozone crisis has reached a new stage. It has become important that some form of action be taken by the ECB to prevent a further deterioration of the finances of the Spanish and Italian governments. If the EU community, if the Eurozone area, if the Germans are unwilling to go to the route of doing Euro bonds, then the last hope of Spain and Italy to have more reasonable borrowing costs is the ECB. Now, it seems so easy to say, okay, the ECB needs the Spanish government, the Italian government needs the money. Why don't we have the ECB print the money? Well, it sounds easy to do, print the money, but it is against the ECB's charter to rescue, to fund any specific Eurozone country. So the problem that Mario Draghi is faced with today is, how is he going to provide liquidity when he cannot actually say to the Spanish government, here's some money. He can't give out funds to the Italian government. One option would be, okay, quick solution would be cut interest rates. Is it possible for them to cut interest rates? Consensus forecast for this consensus forecast for this interest rate announcement right now calls for steady rates. However, if push comes to shove, it is possible for a rate cut to be taken. In the last meeting and in subsequent appearances by Mario Draghi, he indicated that the ECB is keeping a close eye on inflation, but at the same time, he also said, we're looking at it both ways. So it's not only watching out for inflationary pressures, but he's actually saying that, you know what, we think that deflation could become a problem. It is not there yet, but if some forecast says that the Eurozone could be in a deflationary environment, in a deflationary situation, then the ECB would be in a position to say, well, the only solution to a deflation would be for you to cut interest rates, okay? Make money cheap. That way people are encouraged to spend and you head off the deflation problem. Oh, of course, I would point out that we are far from a deflationary environment right now. Inflation in the Eurozone is still above 2% after all. It becomes a problem, a deflationary problem, only if that CPI data is below 1% already. So we're still far from that stage. So we don't think that they will be cutting interest rates today. It is possible, but it is not very likely that that would be the move that they will do. How about LTRO3? Well, LTRO3 can be done, but how effective has LTRO3 or has LTRO1 and LTRO2 been? And after printing €1 trillion, I think the ECB has learned their lesson. you do LTRO, you provide the money to the banking system, and what happens? Did they use the money wisely? I don't think so. One of the problems that we now face in the Eurozone is that you actually have some of the periphery, some of the banks in the periphery in trouble. They don't have enough capital. They have been speculating the markets, and they have lost at times. They're still saddled with a lot of real estate, a lot of homes that they can't dispose. Well, Suleiman, by definition, they say that 2% is what inflation rate should be. Okay, that's the ECB definition, and that's the definition that most economists would use. In a mature economy, having inflation at 2% is good. You don't want a situation where prices do not go up, because that would hint of stagnant economy. Okay? At the same time, you don't want prices to go up very fast. So the definition that economists would use is 2%. Anyway, so LTRO3 at the moment is also out of the question. Over the last couple of days, we've been hearing about bond buying. What does that mean? Well, some of the proposal calls for, okay, the yield rates, the money that the Spanish government, the Italian government has to pay when they borrow from the capital markets is too high. It is just below 7%. 7% is unsustainable. The only solution to lower it is have someone buy it. The only people around with enough money is the ECB. Why enough money? Because the ECB can print money. There's no other authority, there's no other institution in the Eurozone that can print money except the ECB. So they can in theory do this, but as we said, it is illegal for them to go and buy these bonds directly. They can't do LTRO3. It is ineffective. They're not in a situation yet where panic would call for just flooding the market with money. So what is the option left? The option left is this. They use the ESM. Okay, isn't ESM a different body from the ECB? From what I'm hearing is the potential plan is this. The ESM would either borrow the money from the ECB, or the ECB would act as a broker for the ESM. What would happen? Say the Spanish government will issue some bonds, which they did earlier. And what would happen is the ESM can buy up these bonds, even though they don't really have the money. They will just deposit some funds at the ECB. They will just put maybe 100 billion at the ECB, and then they will margin that 100 billion into 500 billion, into 600 billion. They will leverage it. Okay, so they'll be doing margin trading. And the ECB will go and buy these bonds from the Spanish government, from the Italian government, but they will say, we're not buying it for our own account. It is not going to be put in our books. It is going to be placed in the books of the ESM. Okay, that is the solution that's being proposed. Okay, sounds feasible. Okay, it is feasible. One problem: the government, or at least the German policymakers. Since yesterday, Jens Weidmann has been talking, the head of the Bundesbank. He's been saying that the Germans have more say in the ECB than people normally think. They are they are more equal among supposedly equal members of the governing council. And effectively, they're threatening that whatever measure that Mario Draghi will propose, they will oppose. So here's the risk that we face over the next 15 minutes. Come interest rate decision time, we will not hear interest rate cuts. It is unlikely that we will get LTRO3. By the way, in case we get a surprise and they cut rates and they do LTRO3, then obviously that would have a knee-jerk bullish impact for the euro. But that two event is very unlikely. The more likely scenario is they will tap the ESM. And that is where the debate is going to be. If Mario Draghi manages to convince the other members of the governing council, this is the right thing to do, we will do this. And during the announcement, we hear that ESM will be provided funding, or that the ECB will act on behalf of the ESM and buy these bonds from Italy, from Spain, then we would look for a relief rally, a further bounce up in the euro, although I would look at it as a temporary thing. Shouldn't the ECB be an independent from governments? Well, Suleiman, it is independent from governments. But the German position, okay, whether you're talking about the Bundesbank, which is technically a monetary authority, technically should not have any relationship with the government of Angela Merkel, the way they think is the same. It is partly cultural. And the way they think is, you don't solve the problem by just pushing and printing more money. It is a cultural thing because of the hyperinflation that they suffered after World War I, after World War II. And the German view is, you live according to your means. And that's what the Germans want the other governments in the Eurozone to do. Cut your expenses first. Unfortunately, cutting expenses further would mean that you have to fire even more civil servants. Hospitals won't be operating. Teachers won't get paid. Policemen won't get salary. So it is a very contentious issue. And the ECB is trying to provide the funds for the other governments to continue to operate without stepping too much on German sensibilities about how to fix the Eurozone problem. Last week, we heard Angela Merkel saying she wants the Eurozone to be, she wants to rescue the Eurozone as well. This after Mario Draghi said that he would do everything to rescue the Eurozone. The problem is they cannot agree on what steps to take. And will that disagreement on what steps to take be reflected in the decision later? So if at 11:45 GMT we don't hear of a rate cut, we don't hear of LTRO3, and we don't hear about funding or providing liquidity through the use of the ESM, I don't see how the ECB can provide the money. If Mario Draghi will merely restate what he said last Thursday, I will do all that I can to save the euro, then that is not enough. And given that kind of outlook, given that kind of scenario, I would look for the euro to take a hit. I would look for the euro to weaken under those conditions. Okay? So, a mere restatement of, or a mere reiteration of what was said before, would not be enough for the market. Remember that your euro has actually rallied by quite a lot since last Wednesday. And a good reason, or a good one of the reasons behind that rally was that statement of doing everything that I can to rescue the euro. And now it will turn out that he cannot convince the Germans. So if Weidmann cannot be convinced about the idea of using the ESM to provide liquidity, then we would look for a possibility of euro resuming its previous downtrend. As far as by the way, guys, an interest rate cut is unlikely as well, because around September or next month, the Eurozone is expecting to get the latest economic forecast from the staff. So the more likely move would be for Mario Draghi to wait for the latest forecast, the updated forecast on the Eurozone economy before the rate cut happens. But it is possible that they would indicate that by September a rate cut can happen. Although I tend to think that September is a little too late, and even if they explicitly say rate cut this September, I would still focus on the possibility of further weakness in your euro. So let's look at our chart. Let's see technically, are we in a position to say, let's dump the currency? So where do we find our euro at this point? Well, where are we? You look at your chart for the big picture, and you'll notice that we've been congesting just around the 21-day EMA. We are well resisted around this EMA line. If by some form of surprise we do get the ESM or we do get the ECB to fund the ESM, if they provide the money, the firepower for the ESM to buy Italian and Spanish bonds, then I would look for, as a knee-jerk response, a bounce in our euro. I would look for a push to our 55-day EMA line. I would limit my expectations around the 55-day EMA line. Why limit myself to that? Well, according to previous price action, your 55-day EMA seems to be a tough resistance level. Okay, we've been rejected from there before in previous attempts at a bullish market. So I would look at that as the limit for any gains that we can have, even if the ESM gets funded by the ECB, which is not really certain. Now, if we have disappointing news, what do we want to see? We've been congesting. I think critical for us would be a break of your congestion floor, a push through your 2216. Give me a daily close below that area, and I will argue, isn't that a triangle breakout? I would argue, let's resume our bear market. Let's look for a push towards the 2042 region. Maybe even dream about getting to your 1880 price point still. Okay, that is still a possibility. Remember, guys, that even if we do get money printing, we do get liquidity measures, money printing weakens a currency. Supply and demand. If there's too much of something, then the price of something becomes cheap. Okay, there's too much chocolate, there's too many cars, then the price of chocolate or cars will go down. So the same thing for the currencies. If they print money, then in the end, we would look for weakness. Although, again, let me re-emphasize this. If the ESM gets funded, the knee-jerk response that we would look for is a test of resistances, maybe all the way up to your 55-day EMA, but I won't look for a bullish breakout. I would look for a rejection from that area. All right, so enough with our EUR/USD. Let's take a look at what's going on in our Euro/Pound. Essentially, whether you're talking Euro/Pound, Euro/Yen, we would look for the same movement here. Okay, if totally nothing new happens, if there's no statement, then we would look for the currency to weaken. If there's a statement that in effect provides, that uses the ECB, prints money, and then that money gets loaned out to the ESM or maybe EFSF, or they say that the ECB will act on behalf of ESM, then knee-jerk impact would be for some gain. But once we start hitting resistances, I would look for prices to ease off again. We cannot see sustained gains on a relief rally based on new money getting printed. The only way for your euro to sustain a rally is if it's the US that is printing money, if it's the Fed that's printing money. But in this case, it will be the ECB, so unlikely to see sustained gains. Aussie yen, dollar yen. Let's talk Aussie dollar first. All right. How will we react in commodity currencies if there is money getting printed? Well, if money gets printed, commodity currencies in general will benefit from it. Why? Well, let's put it this way. More money in circulation, the amount of commodities don't really change that much. Okay? So, the amount of money that's chasing your gold, your silver, will be more, but the supply of gold and silver will probably be roughly the same. So, we would expect commodity currencies to benefit. We would expect commodities in general to benefit. So, AUD/USD, I would expect this to try to make a run for its resistance, its swing highs at 105.41. If you look at your chart, we have our next strong resistance in Aussie around 106.27, 106.30. That's basically a congestion floor back in January, February. I would look at that as our ultimate target for any money printing decision, meaning your LTRO announcement or ESM will be funded by the ECB, or if there's a rate cut by the ECB. Although again, we don't think that rate cuts will happen. We think that policymakers will wait for the latest staff forecast before deciding to raise rates or to lower rates this September. Dollar yen. You know what? I'd rather not touch dollar yen because the ECB is doing something. Why? Well, for one, both the dollar and the yen are considered to be funding currencies. Both dollar and yen have zero interest rates. Meaning, I'm not really sure which of them would benefit on any money printing. They have the same characteristic right now. They even have the same problems. If you don't monitor the news about Japan too much, their problem is almost the same as the fiscal cliff in the U.S. They're not collecting enough taxes to pay for the size of the government. So I really think that dollar yen we should just stay away from, unless the data that's coming out is dollar specific. Okay, it's the U.S. data, or it's a Japanese data. Even then, I wouldn't look at dollar yen as the first choice of a currency to trade. Your average range in dollar yen right now is roughly around 50 pips. That's not something that you'd like to be trading. Okay, we are less than a minute from our interest rate announcement. Again, we don't expect any rate action, but we are looking for a statement that says the ECB will use the ESM or will provide the money to the ESM for the ESM to buy the bonds. No such statement. If it's completely the same as the one before, if it's merely a reiteration of what was said last Thursday by Mario Draghi, we would look at it as an excuse for the currency to weaken. And what's this, guys? Rates left unchanged at 0.75. Let's wait for further details. Listening to the news. You're watching my line here as well. Okay, we'll wait for further developments here, guys, but as expected, no rate action. No indication that they're willing to cut rates this September. Deposit rates still at 0. And really, nothing's happening. So, folks, it looks like we will have to wait for the press conference here. Yeah, it's been long enough that the algo systems should have read about ESM. The fact that we're not moving suggests that this is a confusing news. So what does that mean? We'll have to wait for the press conference in about 45 minutes time. What about the press conference? Well, if in the press conference we clearly, okay, here's what I'd look for. We want to see how stiff the opposition was by the Germans to any action by the ECB. If it's clear that the Germans really were against everything else, every action that could be taken, I would look at it as an excuse for weakness. But for now, we can't do anything. Okay, so questions, guys, or any charts you'd like us to examine? Well, Suleiman, yeah, the thing is, it's illegal for them to do that. What they have to do is use someone else, or say that they're acting on behalf of someone else. And that's what we need to see. An agreement that the ESM will be buying the bonds. It's illegal for the ESM to buy directly. what they've been doing before is that they've been telling banks, buy it and we will provide the funding, we will provide the money. They've been buying it surreptitiously, but that hasn't been effective lately. Euro pound. Okay. What do we see in EUR GBP? We've actually bounced inside our EMA lines. We look bullish as far as indicators are concerned. However, we are inside EMA lines. Our bounce here was driven on the idea that there could be some form of liquidity measure today. Clearly, there was no rate cut. Clearly, there was no LTRO announcement. And now we will be waiting for the details of the meeting during the press conference. If during the press conference there is no mention about buying bonds through ESM, through EFSF, then I would look at it as an excuse for Euro pound to try to push back down again. Consider ourselves rejected from 38.2 fib. We need a close below our 78, 75 region before we can be aggressive and say, hey, let's do this, let's take the sell side. I won't necessarily just jump. We'll have to wait for a confirmed break. Or you hear that totally nothing will be done and that the ECB will wait for September before even considering using the ESM to buy up the bonds from the secondary market. More QE, well, it would hurt the finances of the German government. Oh, sorry. If we're going to do LTRO3, the worry would be if they do LTRO3, which is more QE, you're going to potentially spark inflationary pressures again in the Eurozone. And remember, in fact, the only job of the ECB really, if you look at its mandate, is to address inflation, to prevent inflation. So, more QE will not necessarily hurt the Germans, but it opens the possibility of inflation, and inflation is, I don't know, something that the Germans really do not want. It's a social issue. It's a historical issue for them. I wouldn't think that the euro would go up. If there's quantitative easing, if there's LTRO3, knee-jerk response would be yes, euro will spike up. But over the next few days, over the next week or so, I would expect that your euro would start drifting lower. LTRO3 will basically just provide relief rally, but create more euros in circulation, and that would weaken the currency in the long run. So it's not the currency response, but there's the idea, the threat that inflation will go up if they do it. And the Germans historically have suffered from hyperinflation before. They don't want that to happen again. You don't want to have a bag of money to go to the grocery to buy a carton of milk. S&P. Let me see what we've got for S&P charts. Well, the ECB decision really should not have much of an impact for U.S. equities. You know, I'm actually surprised that we haven't seen a big sell-off in the U.S. stock market. Yesterday's no decision by the Fed, no QE3, no new liquidity measure, would have I would have looked for a reversal of our rally from Wednesday, Thursday, Friday last week. So suffice it to say that I'm surprised that we don't have a bear market. As far as what the ECB will be saying later, it is possible that once the press conference happens and we learn that, excuse me, it's possible that once the press conference is ongoing and we learn that, again, no effort at all to provide liquidity is going to happen, there will be no acting on behalf of the ESM or loaning the money to the ESM so that the ESM will buy Spanish and Italian bonds. I think that would have a negative impact for European equities, potentially drag your S&P down with it. But we need those details before we can come up with a clear picture. Of course, if we confirm that ESM will be buying the bonds, the money will come from ECB, then to me, that would be reason for relief rally, reason for a retest of our highs in your S&P. Although we're actually facing a good resistance level. We're actually facing a good resistance level around 1394 in S&P 500. Excuse me. So guys, looks like this interest rate announcement is a dud. We're now going to have to really focus on the press conference to try to get something out of this. If during the press conference it is clear that there's no plan to do anything at all, that they will wait for September, then we will look for weakness to ensue out of our equity markets, out of our euro pairs at that point. If there's talk about giving money to EFSF or extending a loan to ESM, or maybe acting on behalf of EFSF or acting on behalf of ESM, then that will be an excuse for a relief rally. Until then, remain sidelined. So guys, comments, questions, complaints. Unfortunately, I won't be with you for the press conference itself. Okay, so guys, if you have any questions, just feel free to raise them. If none, I will just thank you at this point. Again, this is now going to be all about what is said in about 30 minutes time. Well, thank you, Keller. So guys, thanks for joining this class. I know it's a dud. Hopefully the press conference will be more exciting for you. You know what to look for. issues of liquidity, funding the ESM, or even a statement that this September they might decide to cut rates after they have seen the latest staff forecast, those would be excuses for relief rally. Failure to mention anything new. If the status quo will be maintained, then we will look for weakness. This market has priced in the idea that something will happen. So guys, thank you for joining, and see you next Wednesday, or see you in September's announcement. Thank you, folks.